Hello, everybody. Kirk Spano, Monday, May 13th, one day before Super Dog. That is the concert that I'm going to in Fort Worth that has a combination of oil and gas investors and hip hop rock. I think cage wrestling, so I think it's going to be pretty fun. I should be down there tomorrow afternoon, presuming Southwest doesn't southwest me on my flight. I am meeting a new client Thursday, it sounds like. And if anybody wants to meet on Wednesday, I am available. So if you're in the Dallas Fort Worth area and want to get a hold of me through the chat room, go ahead and do that. And I will try to find a way to meet up with you on Wednesday, late afternoon or early evening. All right, so chat room, just going to reiterate that the videos that are unlisted, right? I got rid of the subscription. No longer have to pay for these videos, but they will not be publicly on the YouTube page for like anybody to see. I will take the links and I will put them in the chat, so you will have to go there. Today I am writing an article, Stocks of the Week, Clean Energy Stocks, and by the time I'm done with this later today, this should have the two links from the last two unlisted videos in there. So I will try to double up and put the videos in articles and on the chat. But really, if you want them in the most timely fashion, get them in the chat. They're usually up within 1 day, 2 days on the outside if I'm overwhelmed. Some of you saw a post from Vasuda Healthcare in our service. That was an accident. Seeking Alpha goofed up on something. But he is the analyst, the biotech analyst that I have invited to join us from time to time at Margin of Safety Investing. And I picked him because he's a doctor and he got into money management. So he focuses on biotech investing and does a really good job of keeping track of things in a way that I think is more scientifically backed than the other people who are just running around saying, oh, I like this stock, I like this stock. So I like his systematic approach, and we are going to offer discounts to our members starting right around Memorial Day. I think we'll run a discount. He'll probably post 1 or 2 times between now and then an introduction, and then he does landscape articles where he talks about drug development or biotech developments in a certain segment. You know, whether it's for Alzheimer's or whatever it's for. And I like those articles because it gives us a good broad overview. I'll pull out my very favorite ideas of his and mine, and I'll have them in Margin of Safety. But if you want to go beyond that, if you want more biotech investing, then I would probably say subscribe to him using our discount and, have at it. Always remember, stick with the 4-step process, though. You know, I get a little irritated, and I apologize for people. Oh, why did the stock price go up or down today? Was there news? First of all, GTS. Do you know what GTS stands for, everybody? Google that shit. All right. Don't ask, oh, was there news? Well, click, click, click. You can find out. It's that easy. But that's usually the wrong reason to get hyped up or excited about anything. You should be doing your research. If you're a do-it-yourself investor, you should be doing your research as you go along so that when things move around, you can say, oh, this must have happened or that must have happened, and now the market cares. Not, oh, what was the news? You should know what the news is before it happens, because if you're studying something, you know what's coming. You just don't always know when. All right. So remember to use the chat. Teresa just posted a chart here to do with one of our micro caps. Red Violet shot up $1 today. She likes the way that this is parsing out technically. So she's seeing a mid-20s price pretty quickly here. It's about 21 right now, and we're buying it, right around 20. So that's good. So keep an eye on the chat. Always important to look at the chat. Teresa, I will read that and get back to you afterwards. Vasuda's up here. Let's see who had something. I have been trying to get a starter on New York Community Bank Corp, but keep having puts expire. Well, that's a good problem. Yay! Puts expiring. Money in my pocket. Just buy the stock. Make sure you take a starter position when you start selling puts. Almost always. It's rare that you shouldn't just at least take a starting position when you're selling the puts, because you want that position on. If you're selling the puts, you want the position, right? And you're kind of close already. So always take a starter. I usually start with about a 0.5% position, sometimes a little less. On those micro caps, I started at 0.25%, which is why we didn't get destroyed. At least I didn't get destroyed in Spire Global, because I started with a super teeny tiny position, watched the damn thing come down, and then finally bought near the bottom and took a bigger position when that happened, because up here I buy less than down here. All right, clean energy stocks. Let's start going through them. I don't know why I have this here. Don't need that. Clean energy stocks using TradingView. Most people think of clean energy stocks, they think of the solar panel companies. So let's start with First Solar. For whatever reason, these are all set up to be monthly charts. I don't know what I was doing. I go back to 2018 because I think that is the relevant correction year in the market now. We used to talk about the 2014 to 2016 sideways market, right? 2 years where the market just kind of waved around, began and ended in the same spot, and as the floor of the market. I actually think the floor in the market, if you take a look at 2018 on SPY, and why don't we do that? There you go. So if we take a look at SPY, going all the way back to the financial crisis, you see where the big sell-offs are. Huge volume sell-off here during the financial crisis, and then the sell-offs have all pretty much gotten smaller since then. Even now, when we get a correction, take a look here. Not a giant crash back in the raising interest rate bear market. Even COVID didn't have a massive surge in volume selling. So the last time we had a massive surge was here. Then again in 2012, which really kicked into high gear, the quantitative easing. Now from here to here, notice that for 2 years, that is 2 years, 2014 to 2016, the market basically round trips. See that line? Then I had the bull market here. We got the sell vol corrections in 2018. December 24th, 2018, the market bottomed. Got a big rally because we got quantitative easing right there. That was a repo market bailout. Then it crashed on COVID, but really didn't get below the 2018 prices. Got about there. And then we got another big bailout, which caused a big rally, a little bit of inflation. And now we have finally, after 2 years, 2022 to 2024, broken out the new all-time highs. So the question becomes, what is it going to look like over the next couple of years? Well, I don't think we're ever going to see prices below here. You can kind of see where that's a flat period. I think that's the new floor in the market. Doesn't mean we're going to get there. No, doesn't mean we're going to get there. This could also be the floor in the market. It's a little bit above the 2019 high. And really, after that rise there, let's imagine that COVID didn't happen. It still got there. That's almost half of the rally from here to here. So this area down in here seems to be logical landing spot for the next bear market. Now, can it get way down here? It could, because we as humans screw things up from time to time. I don't think that it will, though. I think that we're going to get back down in here probably in 2026 or 2027. So up, down, something like that. I've been buying these dips. I think a price right around 500 on SPY is probably a good spot to buy if we get a correction over the summer. Tell you what, this market though, it really it's resilient. There's just so much full employment going on that 401k plans are just pumping money into the S&P 500. And while a lot of those companies don't deserve to get pumped up, probably half of them don't deserve to get pumped up, maybe even 300 don't deserve to get pumped up, they get pumped up. And there are very few companies that are falling that aren't named Paramount and Warner Brothers. So, and even those have stabilized lately, even though I'm looking for a way out just because I think they end up doing better when there's somebody else. In any case, if we get a correction to here, this market top, right, kind of becomes support. So maybe 470 on SPY. That's what I've talked about before. This is called a fair value gap. These orange lines are fair value gaps. They act sort of like magnets because of the institutional investors that congregate around those price levels. You notice how they seem to touch peaks and troughs, right? It's because we're little guys. We don't really make that much difference on the big moves. Now we can affect the market a little bit here and there, but not much. If you took a look at some of the things I posted over the weekend and was published over the weekend. Bloomberg and Barron's both had articles, and I think the Wall Street Journal did too, if I remember. Trying to remember when I went through the Wall Street Journal, but they all had articles about how the hedge funds are at record short positions on small cap stocks. And today the S&P 500 is about flat, but small cap stocks are up over 2% or right around 2%. We've seen days like this from time to time, and that has to do with small short covering rallies, right? Stocks that get triggered to have short covering for some reason. So you have to consider that I think we're early in the process of the small caps outperforming, because at some point the Fed creates the conditions for a lot of these small caps to rally. Now, probably not a majority, because a lot of small caps just aren't great companies, just like a lot of large caps aren't great companies. And I want to pick out my small caps. So we're going to take a look at the clean energy stocks today. The first one that most people think about is First Solar, because people think, oh, solar panels, that's clean energy. There's a lot of clean energy stocks out there. But the panel stocks are the ones I'm least excited about, because I just don't see that as being a forever market. I think energy management is a forever market. But I think once we build out the solar over the next 10 years, 15 years or so, then it just becomes a maintenance thing. It's a replacement cycle. So while we are early in the growth phase for First Solar, I think so many people have anticipated it. And now that we have more tariffs on China, I think we probably get a rally. I do think you probably see a price around 300 on First Solar in the next few years, but that's not super exciting. I mean, it's not even a double. I mean, it really would have to rally extra hard to get way up here. I mean, there are fair value gaps, those institutional magnet prices way up here. I don't know that we're going to see them. Maybe. I mean, if everything goes right and this becomes a meme stock, it could shoot up here. But I do think that one of these price levels around 300 is probably where it's going. I'm not going to own First Solar. No, I'm not really all that interested. It's a stock that I'll talk about on the free side of Seeking Alpha, but I'm not really interested in First Solar for me. Sunrun, one of the big residentials, I believe they're second biggest. It might be the biggest. This stock has gotten the heck beat out of it. The question you have to ask yourself is, when are people finally going to start putting solar panels on their houses? And I think that's still 3 years out, 4 years out. You have the laws in California, but the rest of the country is hard to adapt. I think there has to be cheaper batteries and energy management systems for it really to be mass adopted. And it's hard inside of the cities, which is where most people are. So companies like First Solar that are pivoting back to utilities over the last couple of years, but really now, and Total, I guess Total could be in here because they are the parent company of SunPower, and we'll look at SunPower next. But I think at Sunrun, I really like selling cash secured puts on this one, but not owning the stock. So this is the rare exception where I would sell cash secured puts because the premiums are just so high. And I think that we have wrung out a lot of the risk here. There's not a lot of risk. So if it gets put to you, that's okay. But if you take a look at the August at the money puts, go down to 11 here, just a little out of the money instead of a little in the money, and you get $1.59 on that put. That's over 10%. The stock would have to fall to be put to you. You'd have a net cost, right? Because the stock is trading at 11.73 minus $1.59. You'd have a net cost of about 10.20. That's pretty darn cheap for Sunrun. So I love selling the puts on this one. So I think the August puts at $11 to get $1.59. Just count in your head. May, June, July, August. So really about 3.5 months, right? To June, July, August, 3 months. 3 months. There's 4 3-month periods in a year. This is just a shorthand thinking. You can use a calculator to get the precise percentage. But you're going to make over 10% annualized. I think you're going to be closer to 12%. Annualized, about 12, 13%. Annualized, you're going to have right around a 50% internal rate of return. I mean, that's pretty darn good, right? So you can sell these puts on Sunrun at $11. If it gets put to you, you have a net cost of $10.20. That's really cheap. And, then you sell covered calls on the next little rally. So I like this one. for selling puts, but I'm not going to buy the stock. I'll just use this to generate big premiums for the portfolios. SunPower. Okay, so this is the one that has the super margin of safety because Total owns like 60-70% of the company. And it looks like it has bottomed out. I mean, could it jitterbug around here for a while like Sunrun has been doing? Oh, absolutely. So if you take a look at this one, and you say, okay, the reason I might want to own this one is because of Total having the big backing. So if you take a look at the July puts, and I don't know if there's a good one out there, 250 July puts get 60 cents, 60 cents into 250 over 20%. I mean, it's a huge, huge, option premium income. Somebody asked why no starter position on Sunrun. Well, I just explained it. I said the reason why I'm not taking starter positions in these is that it's 2 or 3 years or 4 years before they really ramp up. So while the prices are super cheap, I think I have plenty of time to get to own this stock. So if I just keep selling the puts, eventually it'll get put to me. Now, if it gets put to me the first time, so be it. But I think I can just keep selling these puts on dips, and eventually, it'll get put to me. And this isn't something where I think it's imminent, within the next year that the share price necessarily surges. These might not really move until after the next bear market, which I actually think is in the next 2-3 years as well. So take a look at the timelines here. We know that the economy is really in equilibrium. I mean, it really is. If it wasn't for housing prices being high, everything else would be shaken out. There's a way to fix the housing prices, but it's going to take a decade, and that's problematic for a lot of people. So how do they fix it? I think that there's things that the Fed can do, but there's also things Congress has to do, and then you have the companies have to do things too. So there's a lot of moving parts in housing. There's no easy solution. Anybody who says there is full of shit, and that's why you probably don't get outright deflation until housing prices completely flatten, which is going to happen eventually. It's not for a while. It's going to be the combination of the boomers retiring and finally starting to sell some of those houses. Although I think that's going to be a slow drag because they have low interest rates or on their mortgages, or they're paid off. I think we need new construction, and that takes time. So we'll see how long that plays out. But my guess is we get a recession, a small recession, nothing huge, 2-3 years out. And as long as I'm right that we have pre-funded the next crisis because of overspending on COVID, then we probably don't get a horrible financial crisis unless there's a series of events this fall that line up to allow government to be really, really stupid. And they could be. People like stupid because it's an easy story. And, we'll see. We'll see what happens. I will worry about a crisis and a deep recession if the series of events that I worry about happens. And the series of events that I worry about is Trump gets elected and he gets the entire Congress. If he gets the entire Congress and they can pass a reconciliation bill that is incredibly stupid, then we probably get like another 2008 probably later in the decade we get another 2008, and we'll get rich on it. I promise we'll get rich on it. I've seen it. I know the story. Give or take, we should be able to sell almost everything, short the market, buy treasuries, let everybody else burn, and then we'll get super rich, and then it's up to you to help your friends because you'll be the rich friend. All right, so the cash secured puts us on power I like. But again, I'm not in love with these outright, so I'm not going to buy them, but I'll sell puts because the premiums are huge on this pessimism for clean energy, which is dumb because I showed you the charts the other day. Spending on clean energy is through the roof. All right, Brookfield Renewable Partners. Just when we start talking about it, it surges. It goes from 21 and 22 all the way up to 26 and 27. Now, we should get a retrace to right in here. So right around 25, these boxes are regions where the action changed. And it's where resistance turns into support. So this area right in here, equal with this box going over, it's probably a pretty strong support zone. Could it get down to here? Here it could, right? These are just different, do they go down those steps? But a price around 25 Brookfield Renewable Partners. For those of you who want something a little bit more vanilla, more utility-like. This is something that maybe you can sell a put on when it gets to the middle 20s. So we can take a look at that and go, okay, so let's take a look at August. Let's take a look at 25, 70 cents on the 25 right now. But if the share price drops another buck or two, then this goes up a buck or two. So if all of a sudden you can sell the August $25 put for, say, $2 or $3, that becomes pretty attractive, doesn't it? And then if it gets put to you, now you're collecting that big Brookfield Energy premium, that big dividend, right, from a lower cost basis, you're in really good shape. Similarly, we saw Clearway spike off the bottom, right? They had really good earnings, both companies. So you'd look for a retrace into here. And this one, about the same. When it gets into the middle 20s, when it pulls back, when it gets this little bit of a retrace, go ahead and sell puts again. NextEra Energy, get rid of my old drawings. We don't need them. Notice what's happening. All these stocks bottomed, higher low. It's going to retrace. Then it's going to take off. It'll be 1, 2, 3, right? 1, 2, 3, 1, 2, 3, until it's got 3 giant waves up and 2 little waves down. So this is the end of the first wave, give or take. See if the Elliott waves fill in. They do. See? Look at that. So we'd expect a little bit of a retrace off of that fair value gap and then take off again. So am I super excited about NextEra Energy? Nah, it's all right. Again, it depends on you. For me, I'm more of a sprinkles, right? Sprinkles and syrup guy. Versus a vanilla ice cream guy. So like I'll have toppings on my Rocky Road, right? So because I use the volatility to generate all this premium income, which has allowed me to accumulate a lot of small cap stocks because I still did okay, even though I wasn't in the large caps that that led. Somebody says you look like a sprinkles guy. I am. I have too many sprinkles. So a lot of these charts look like this right now. So you're looking to buy these pullbacks, ride them up, and then if we have to sell everything, we'll sell everything in a couple of years. And then there you go. NRG, look at that. I mean, that's just, I think we've missed this one for a while. Nothing you can do about that. I mean, this was the spot to buy right there. So we talked about it. We just didn't pull the trigger. It happens. You move on. So We Energies. Tell you what, folks, do you remember why we like this company? What's the reason that I really like this company? And again, it's for the appropriate type of investor. I don't really invest much in it except for a couple of accounts. Why would we like this company? That's right, transmission company. They are the primary owner of American Transmission Company. So they've consolidated for 5 years. But look what they did over the period before that. It's pretty good, right? So they've been in a heavy capex period for a long period of time because they're building out the grid in like 7 or 11 states or something. They pay a good dividend, like 3.5%. Not huge, right? If you're a dividend chaser, you go, oh man, it's only 3.5%. But take a look at the total return that you got on a utility. Now it's chopping along. It's about halfway through its capex period, so you can sell puts on this one, and eventually it's going to have another big rally because they have so much new revenue coming as the capex also dissipates. That's what they look like over the next 5 years. CapEx leveling and then turning down, and then all the recurring revenues going up. So this is just one to keep an eye on. Again, not in love with it yet, but you can sell puts on it, which probably aren't that high, right? It's a utility, so you probably aren't getting much in the way of premium. Sell the July 80s, you get 60 cents. There's nothing sexy about that. That's not even a 10% annualized return. But if suddenly the price drops down to 80, you can sell the $80 put, probably get $2 or $3. Now it's pretty sexy. And if it gets put to you, hey, great. And if it doesn't get put to you, you collected the money. Again, this is to me a very retiree-oriented stock. It's a utility. There's very little downside, and you might get some total return upside in the long term. The stealth utility, the one I keep telling you about, right? Nobody understands. I tried to explain this to, some millennial traders and Gen X traders who insist that this is just purely a blockchain and Bitcoin play. And it is. I mean, it's really the biggest Bitcoin miner out there. However, they've been using the money they make in Bitcoin to build a utility, right? Their recent deals to acquire 2 facilities that produce energy on top of the data centers get them to about 1.2 gigawatts of electricity, about half that they own and about half they have rights to. So in Texas, what Marathon Digital does is that when they have a brownout in Texas, Marathon Digital stops taking their half a gigawatt of energy off of the grid and lets Texas use it in return for a fee, right? Because they have a contract. They can keep that energy if they want to, but they've cut a deal with the state of Texas saying if you have an emergency, we'll let you buy the energy from us. And last year they made about $130 million doing that. This year they've doubled their capacity. They still have the same access to the grid, a little bit higher, but then they have an equal access that is their production. All they have to do is shut off their blockchain miners, sell the energy to Texas. They could make $300 million this year if there's a heat wave. It's big freaking money. Oh, and by the way, when Bitcoin goes up and they're one of the fourth or fifth largest holder of Bitcoin, they get that too. So this spike here was a test. I don't think that this was meme. I mean, this isn't, I mean, look, this took a couple of years. This is not just hyperbolic straight up. This is just a test. This is setting a price. I'm pretty sure that they get here, test it, probably a small correction, and then they break through. Their ability to continue to buy data centers that have clean energy on top because they have all this money coming in from the Bitcoin and now AI services because they own data centers. I mean, this is a three-pronged company. People just think about it as Bitcoin, but to me, it's a three-pronged company. It's an existing business, an existing growing business, and then I'd say the AI is on a leading edge. So yeah, I don't know what else I can say about Marathon Digital. I just think their management has been very good. A little bit too much stock-based compensation, but that's pretty much par for the course in corporate America, unfortunately. I think this stock, I can't tell you how much I love this stock. This is one of my favorites. I think I'm going to get a 3 or 4 bagger from here in the next couple of years. Then I get my pullback and then, off to the races again. And remember, the amount of energy America will use is going to roughly double by sometime in the 2040s. This energy has to come from somewhere. It's almost all going to come from solar. A little bit of hydro, a little bit of, geothermal, a little bit of wind. But solar is by far the fastest growing energy source, faster than anything else, gas, anything. It's 60 to 70% of the new electrical generation. And I think that number is going to get up to around 80% because it just makes that much sense, especially as the batteries get cheaper. And remember, a car battery is going to be more expensive than a battery that's just sitting there like a refrigerator. When space isn't a constraint, batteries are getting very, very cheap very fast. Power management, Generac, we've talked about a number of times. Jitterbug started to move up. You're going to want to buy the dips on this one. Solar Edge, sort of beat up because of it being solar, but also being Israeli. So you're seeing a stock that's just gotten crushed. I believe they're Israeli. Let me double check that. Could get my companies wrong sometimes where they're from. Yeah, it's Israeli. Okay. I think that Solar Edge has suddenly become very attractive. I think this stock probably gets back up into this range over the next several years. So this is one that I'm probably going to want to be selling cash secured puts on. Take a look at the July 50s, getting $5 a share. So that's around 10%. Again, that's about a 40% annualized return. And if you end up owning this one for a net cost of 45-ish, you should be pretty happy about it. Enphase, the American version, slightly different technology, right? The difference between the companies is mostly the way that they hook up their components. They do the same things. So this one got down to this fair value gap down here, right? Institutional buyers kicked in. Now it's jitterbugging around as retail investors try to figure it out. Look at that. Let's draw some pretty lines here. Look at that. Let's draw another one. Yeah, that's a triangle looking to get busted out of. So I think that Enphase is probably something that you should be looking at right about now. I'll understand those triangles. Usually there's a breakout. I don't think this one's going back down. I think this one's going to pop up. So you can sell the puts or you can buy it. I think I'm going to take a starter in Enphase where I don't have it already. But the August 110s, you're getting $12 for. So, again, around a 40-something% annualized return. That's pretty hot. As Paris Hilton would say, that's hot. I think you should be looking at this one. It is, to me, Enphase is one of the handful of stocks that are must own in clean energy. So I'll keep my lines on here. I put these orange lines in 2 years ago, said here that's going to get down to here for sure, and it might get down to here. Look at that, right on the money. So now where are we with MP Materials? Has anybody been doing a reading on them since I mentioned them a few weeks ago? No. So Mountain Pass, where they mine the rare earth metals, is really at full capacity now, and their processing plant, their initial one, is running, and the one that they're building in Fort Worth, which I'm going to try to go see, is starting soon too. So you take a look at it, you know, like, okay, the commodities right now are in the hole. We're going to talk about lithium next. The commodities are beat up. There is general pessimism on clean energy because politics mainly, and the fact that batteries aren't cheap yet, but they're coming. Why are they coming? Because this is a vital supply chain for batteries and motors. And, you know, they are instrumental. Rare earth metals are instrumental in defense industry. So this is a company that's going to have guaranteed government business. They have a giant contract with General Motors. All of these things are known, and yet the market hasn't rewarded it yet. However, there's enough smart money getting in. Look at the volume pickup down here, that the decline is basically ended. This is one that you should start accumulating. I took a starter position today, and I sold a cash secured put today. So let me show you the cash secured put that I sold. I sold the August 15 for, I think I got $1.05. That's nice, right? So you're getting 7% on your money through August over 3 months, about 28% annualized. And why is that rate of return coming down? Because the risk is being squeezed out of it. Returns on options come down as the risk gets squeezed out and the volatility gets smaller. So you're maybe a week or two late on getting the best option premium, but you've also de-risked by a little bit. And their earnings the other day were pretty good. But everybody hates small caps right now, and especially X-SPACs, so you get a bargain. I think you're going to see MP Materials get all the way back up in this range pretty easily. It'll jitterbug from there. Then I think it breaks out. Because when you look at the size of the contracts that are coming from the government and from General Motors and probably other car companies soon, 3-4 years out, this company is going to be gushing money. And it's not because of what they're mining. The mining's just the raw material, but they have a vertical supply chain. They are all things. They are the miner, they are the processor, and they're making magnets, which are instrumental in all these things. So when you take a look at companies that could act like Freeport-McMoRan does when there's a copper rally, I think you get these guys, plus they have a better value chain, right? Because Freeport-McMoRan doesn't make any of the stuff that comes from copper. They just mine the copper. These guys not only mine the rare earth metals, but they process them and make one of the key things. They're going to be making magnets. So I really like this company. I think that a triple from here is probably pretty likely in the next few years. Then you'll get your jitterbug and whether or not we get a crisis or not. But I think ultimately this is a stock that I think this is probably $100 stock at some point. I think at fair value gaps all the way up. Lithium Americas completely beat the heck. This is one that we actually knew about way back when they were buying Millennial Lithium. So I was in Millennial Lithium, and then these guys bought it like 3 months after I got us in. I think that was like a 60 or 80% gain and pretty quick. Lithium spiked on all the hype. Again, Gartner hype cycle stuff. Now it's down, probably going to go up. I think that this is your double bottom here. I have bought a starter position and I sold cash secured puts. I have one set of cash secured puts from a few weeks ago that expires Friday. Not sure if it's going to get put to me. But I think I'm going to sell $5 cash secured puts to August. You're getting $1. So that means that you could buy the stock today for $4.41, which I do think you should take a quarter or a 0.5% position. But then you sell this put, you get $1 to hold 5. That's a 20% gain in 3 months. That's an 80% annualized return. And if it does get put to you, you have a net cost of 4, which is 10% lower than what it is today. I think you should be pretty aggressive on this one if you are generally a growth investor. But even if you are just an income investor, let's suppose you're a retiree and you don't really want to buy a position, but that premium is juicy to you, then skip the starter, sell the put, collect that giant premium, and if it gets put to you and you have a net cost of 4, great. Lithium is cheap right now. It's not going to do anything but go up in the future. And this is potentially one of those stocks that could be, 500% gain in the next couple of years, right? From 4 back up to where it was, 6-bagger maybe. And then we'll see what happens. Over time, there will be more lithium production. As everybody gets their EV over the next 20 years, 20 years out, it all changes. Who cares? We'll worry about that then. If you want the big player, here you go, Albemarle, which is the grandpa stock here. It's not really a grandpa stock, it's just grandpa stock in this industry. But look at it. It's in your jitterbug. It hit this area here. That's important fair value gap stuff there. It's jitterbugging around, probably gonna rise. So if you want that one, August 130s, you're getting $10. I'd probably go down to 125, de-risk it a little bit. So 130 minus 10 gets you a net price of 120. 125 minus 8 and change gets you a net price of about 117. This is probably the one I'd look at. The August 125, I'd probably set the price at 10. Let the volatility get this trade executed. So don't try to do it right away. Set a limit, $10 for the August 125. Let the stock bounce around, and the option will execute in the next week or two, would be my guess. Now, you don't have to do this one. I would probably own Albemarle through one of the ETFs, but then sell the puts on Lithium Americas. That's what I would do, and that's what I am going to do. I'm not going to make a trade in Albemarle. You can. It's viable if you're a 40-50 stock person, for sure, but I'm a 20 to 30 stock person, and then I use ETFs. I took a look at PBW and QClean and iClean today, and I saw how they were moving. PBW, which is the small cap one, it was up, 3% today? So, there's a lot to be said for mixing your small caps and large caps in a way that you focus on the right industries and that you use the market cap and the premiums and the volatility to generate your greatest return. Remember what Jeremy Grantham said? He said that most companies that are in clean energy are going to see inflows on capital, and that is very positive for their businesses and their share prices. So that is important to always think about CapEx cycles for the building, but also investor money. Are they pulling in investor money? And one of the 3 biggest trends out there is decarbonization. You have the aging of the population. You have the 4th industrial revolution, which people think of as AI. It's more than that, but they think of it as AI. And then decarbonization, which is, again, half the population doesn't believe it yet. Probably the most important one. But AI will be used to help with that problem. So we have seen the charts. I showed the charts in the last video of how much money is going into decarbonization. And it's not just clean energy and not climate change mitigation. It's decarbonization. And when you think about it logically and ethically, we should be trying to be carbon neutral, right? The Native Americans thought that way, and maybe they should all be in government. So we will see this major secular trend play out over the next 20 years. However, we are at a point of, I would say, pretty much near maximum pessimism on the clean energy stocks, which we've seen it developing for the last couple of years. And now a lot of these stocks are starting to move up. We saw the utilities already shoot up. That's part of kind of a defensive mindset. But eventually we start thinking about growth again. So the only 2 lithium stocks I'm really thinking about are 2 I showed you. I don't know much about any of the other ones. They haven't jumped out at me as special. Remember, the lithium, you have your American miners, not much there. And then you have your South American miners. And I will tell you, good things are happening in Argentina. I mean, the guy's a little bit nuts, but he's nuts in a good way, I think. I think that you're going to see a lot of good things. And that's one of the reasons why I'm starting to overweight Latin America. I think you're going to see a lot of good things come out of Latin America. Remember, they're super lithium rich, and that is going to be very good for them over time. I have to register for my flight here in a second, but I will get this all done tonight. I'm going to have 2 clean energy articles out for you tonight. Hopefully get an Occidental article out tonight as well. And then as the week progresses, I will have 3 reports from Super Doug. And then next Saturday morning, before I jump on my flight home, we will do a webinar on the oil and gas industry, everything that I saw and heard at the Super Doug convention in Fort Worth, Texas. All right, have a great day.